I'm live yet, so we're just gonna chill. But we should be live at about this point. So guys, Real Deal Video Strategist Club, welcome to this afternoon session. Pretty excited about this, mainly because the pieces of the puzzle from what I envision this club to be are starting to come together. And there's three things that I really, I'm committed to making sure that you guys have. One thing is education, right? Education and knowledge that you're getting through going through our program. The second thing is support, right? So when we do coaching sessions, strategy sessions, one-on-one coachings, accountability sessions, stuff like that. So you're going to get support. But the third thing is having resources available that are going to help you be a more successful entrepreneur. And that's why we're introducing all of these different experts in different fields. So we've introduced digital marketers, we've introduced SEO people, we're going to be introducing a lawyer at some point to talk about contracts. But today we are going to be speaking with Renay Law, who is a tax pro. She handles all of my taxes. It's incredibly important that as an entrepreneur, you have your taxes on lock, because that's just part of the game. And Renay's, she handles all of it for me. So I figured I'd bring her into the group. That way, one, if we have questions we can ask, and two, if you're looking to hire somebody to handle your tax prep, your tax planning, tax questions, your bookkeeping. I don't touch my books anymore. She handles them, which frees me up a whole bunch of time. So I brought her in. She's awesome. So Renay, what is going on? How are you?
I'm good. I'm busy, but getting ready for the extended deadline for corporate returns, which is September 15th. So just trying to finish up a few of those stragglers.
Okay, I'm sure we'll have questions about that extended deadline and who's supposed to be filing and when they're supposed to be filing. So
sure.
Just a heads up, guys, if you guys are watching in the Facebook group, I will be monitoring the conversation in the Facebook group. So if you have a question, go ahead and ask it in the Facebook group and I'll try to get to it. If you have a question that's not getting answered because I don't see it, it's better to hop into the Zoom room so you can just ask the question. And that is going to help me out tremendously, but we will answer as many questions as possible. So why don't we do this, Renay? Why don't you just go ahead and introduce yourself, who you are, what you do, all that good stuff.
All right. My name is Renay Law. I'm with 10 Point Bookkeeping and Tax. I started my business about 4 years ago. And prior to that, I had worked for 2 CPA firms and noticed that there was a real need for bookkeeping and tax preparation, tax planning, because once small business owners would bring in their documents for the tax preparation, a lot of times they didn't have their bookkeeping in order, and the CPAs that I was working for would send them away, asking them to go ahead and get their profit and loss statements and their balance sheets all taken care of first before the tax preparation. So just ask me any questions you need. So
I'm pretty sure that I was one of those people who didn't have my stuff in order, and I was like, Renay, help, and she helped me out. So how about I start off with the question, and then we can start answering questions from the Zoom room and from the Facebook Live. Again, if you're watching on Facebook Live and you have a question, put it in the thing here and I will ask it for you. So Renay, one of the big questions that I think a lot of us have, especially when we're starting a business out, is where do I start? Do I register as a sole proprietor? Do I register as an LLC? Do I register as an S Corp? What do I start out as, and how do I progress and go as my business grows?
Sure. So typically, most companies are actually starting out as sole proprietors because they start most of the time from a hobby or, a side gig kind of thing. So they do start out as sole proprietors, but that's where tax planning can be a big help in that regard, because once you reach a certain point, that you may want to consider switching over to either an LLC or an S corporation or a partnership. So that's something that we would have to sit down and go through each individual company's books and try to figure out what's the best route for you and what's going to save you the most in taxes.
Can you explain what the difference is between a sole proprietorship and say an LLC?
So a sole proprietorship is actually just, the individual person. It's filed, all of your taxes are filed on your personal tax return in what's called a Schedule C. So your business income and expenses go directly on your personal tax return. As far as a S Corp or a C Corp or partnership, those are separate tax returns for the business, and they flow through. Two of them, actually, the partnership and the S Corporation, flow through to your personal on what's called a K-1. And then the C Corp is actually taxed at a higher tax rate most of the time. So I don't typically work very often with C corporations because they're usually larger corporations over 10 million in gross revenue. So.
Okay, cool. So definitely a difference, and it's important to understand that difference when you're setting up and making sure that you're set up correctly. So awesome. Let me do this. Honestly, I've probably got like 20 questions, but I don't want to hog all the question space. So if you have a question, you're on the Zoom room, go ahead and unmute yourself and ask a question, ask away. And I'm going to look at the Facebook stream as well to see if anybody's asking questions.
Yeah, Madison asked a really great question that I actually had as well, but she was asking in the chat here, as a videographer with an S Corp who mostly films weddings for her, but, getting close to 100,000 in gross this year, what is that reasonable compensation that you?
Okay, reasonable compensation is a real tricky thing that we have to actually plan for because as a small business owner, you're wearing so many different hats, and the IRS really says that if you were to go out and hire someone to actually do that particular job, then you would need to pay them a reasonable salary. And usually what we do is do some sort of salary what do you call it? Just
salary study.
Salary study, exactly, to try and figure out what your salaries are in the area. And then we can take a look at your profits and everything and make sure that you can afford to pay yourself that amount. There is some leeway there because you can actually take distributions to offset some of the taxes and things that are associated with your salary, but you typically don't want to take more in distributions than you do in salary because the IRS could come back and say that those distributions should have been part of your reasonable salary, and we need to pay taxes on that, back taxes on that. And the payroll taxes are usually the highest and the most penalties involved if you don't pay those.
So when you're talking about distributions, that's meaning a draw from
a draw based over the W-2 wages. So. Got it.
Okay, cool. And that's definitely an important S Corp question. Great question, Madison. Good stuff. Who else got questions?
I wonder, so in doing that search for what a reasonable compensation is, are things like what's some of the websites, maybe Glassdoor, or what are some of the other websites that what would you recommend in doing that study?
So actually what you can do is come to a tax professional like me, and we can actually do a salary study and actually do a tax planning session where we show you, if you take this much in salary, how much is that going to save you in taxes? Because that salary then becomes deductible to the S corporation or the partnership. So I mean, not partnership, the S corporation. Sorry. So as a partner, you can't take wages, W-2 wages. You'd have to take guaranteed payments or things like that. So,
gotcha. Now, I guess to build up on that, so the business would be taxed as an S corp. That would be a deduction. We would be taxed as an employee W-2. Is that right?
Correct. So actually what happens with an S corporation is the net income of that business flows through to your personal tax return on what's called a K-1. And that K-1 shows you the amount of your distributions, the amount of net income that comes from the business, and then also, any other distributions or deductions and things that you can take from the business itself.
Awesome. Good questions.
So you are taxed on both the income from the business, the net income from the business, and your W-2 wages, but it depends on your tax bracket. And again, we'd have to do a tax planning session in order to be able to show you what savings you could do if we switched you over to an S corp and did the reasonable salary. So
I can tell you that the savings on my tax bill was huge when I switched from LLC to S corp. It was a sizable difference in how much money I was paying in taxes. So
yeah, because you're typically not having to pay the self-employment tax, and so that is huge. And again, the salary becomes a deduction to the business. So
exactly. And I would say that there's probably a certain dollar amount that you have to be clearing in your business to be able to do that, because then you basically have to pay yourself a salary, and you got to be able to afford. Your business has to be profitable enough that you can pay a salary to yourself. So that's one of those things where speaking with the tax professional and knowing once you get to that point of I'm making enough money, now I can go be an S corp to get that savings is really going to be a night and day difference. So what do you usually say, Renee, about like dollar amount and revenue and profit that like a creative professional would need to be at to start having that conversation?
Typically, if your net income after expenses is over 100,000, then we definitely need to take a look and see if it would be beneficial, because that's kind of where the break-even point is as far as taxes go.
Okay, cool. Anybody else in the Zoom room have a question? I got another one if you guys don't have questions. Okay.
Yeah, I got some more too, so we can go back and forth, David. Go for it.
We're gonna play a little ping pong until somebody else decides to have the guts to ask a question. Okay.
Sounds good.
Renee, what are some of the things that I can write off in my business so that I don't have to pay taxes on, like equipment, travel, food, home office? What are some of the big things that I should be looking at to write off and keep a track of?
Yeah, so I actually have a list that I can email out to you guys too, or send to you guys. But it is it's typically meals that are associated with your networking. If you're taking clients out, you can deduct 50% of those meals. You can also deduct any expenses such as like dues and subscriptions, expenses that are in line with your business, of course, computer software, those kind of things. You guys probably also have, some sort of cost of goods, like, so depending on your your particular your business, like David wouldn't, for instance, would have like obviously video production equipment, those kind of things that we can depreciate. Anything over $1,000 that's an asset purchase, we can depreciate fully in the first year. Or we can also look at, depreciating it over the life of the asset based on the rules that the IRS puts forth.
Okay, so let me give an example of what I'm thinking. So there, I want to buy a $5,000 camera, and at this point, hypothetically speaking, my net income is $100,000. So if I buy a $5,000 camera, instead of being taxed on the $100,000, now I'm only taxed on the $95,000 because of that deduction. Am I understanding that correctly?
Correct. So yes, so that's where we can either take what's called special depreciation, which allows 100% of the equipment to be depreciated, or we can take Section 179, which is kind of the same, where you can take 100% of the particular piece of equipment. Or let's say that you were at 5,000 net income, and you had 5,000, that you wanted to depreciate. We could depreciate that over time, so that it goes through to the next few years too. It would depend on the type of equipment, based on the life of the equipment, based on the IRS rules. So okay. There's 3-year, 5-year, 7-year, and 15, of course, 15, 39 for buildings and things like that. So
Got it. Okay. Now, one of the things that obviously working with a tax professional to do your tax plan is important is you can write a whole bunch of stuff off, but then it's going to show that your income is low, right? So if you're in a situation like I was in very recently where I'm buying a house and I need to show high income, then it might not be smart to write everything off because then you're not showing income. Can you
Right. That's
explain
where,
why that's important?
yeah, so that's where tax planning comes into play. If you know that in the next couple of years that you're going to be purchasing a home or something, then maybe we want to back off on some of the allowable tax deductions. Just because there's a lot of things that the banks can add back in if you're going through a bank for mortgage, like depreciation, and sometimes they can actually add back in mileage and things like that. But typically they want to know that you're making enough income to cover that payment. And so as an S corporation owner, that's where you benefit because you've got that W-2 income, and that income doesn't change, with the tax return. So
Okay. Yeah. So if you're in a situation where, you're financing, you're going to be financing a house or a car or something like that, it's really smart to talk with your tax professional to make sure that you're in line with your income to make that happen. Okay. Tomas, did you have another question?
Yeah, man. So you mentioned car. That's definitely a good question. If I were to have some marketing material of my website or company name and logo on my car, does that mean that 100% of the mileage would be able to be deducted, or is it still only going to and fro production and shoot?
Actually, I'd have to double check the tax code rules, but in my past experience with all of with anybody that has advertising on their vehicle, you can take 100% of the mileage deduction because it's a constant advertisement for you.
Good question.
Awesome. Yeah, that's what I figured.
On there.
What's that? Oh yeah, so does it need to be any particular size? I guess it's
typically it's those cars that have the wraps or the signs on the the realtors have their signs on their cars too. So yeah.
Yeah, that's not, and I just learned recently that it's quite affordable. I think the only thing that I saw was it was 2,000 for a full on wrap. Which I would have thought for some reason it was way more than that. So that's actually pretty affordable.
So Renee, can you deduct the cost of doing the wrap and then do the mileage?
So yes, you actually can.
Okay, so I'm kind of in the vein of thought. In some ways, trying to, pay the least amount of taxes that I possibly can while also being aware of where I'm headed to, personally with my family, home buying, so on and so forth. Right.
Right.
But that being said, attempting to pay the least amount and attempting to, see what makes sense as a business owner. So that's kind of where that comes from. David had mentioned a moment ago, a home office, right? And so within that home office, I've got a few questions on that vein of thought, which, I've heard that it is the square footage and the percentage of that square footage based off, of the entire square footage of the place.
Correct. So with home offices, the office itself has to be exclusively used for the business. So and yes, it is a percentage. So let's say if you have 200 square feet of office space and your house is 2,000 square feet, you could only take the 200 square feet. But that said, you can take that percentage of the utilities, any repairs and maintenance on the home. You can also depreciate that home based on that percentage. The only problem with that would be that you would have to reclaim any depreciation that you've taken on the home office when you sell the property.
And so if that were the case as well, am I paying from my business on that 10%? if I were paying a mortgage, or, you know?
No, you would still continue to pay all of that from your personal funds, just to keep it completely separate. But we would then at the end of the year get the information on how much you paid in the total taxes, interest paid on the home, real estate, you know, the repairs and maintenance, and then also the utilities. There's a few other things like homeowners association dues. If you pay those kind of things that we can also add in. So
Got it. Okay.
So this is where having that conversation, right, with your tax pro, and they're going to ask you like, okay, all these questions, and then they start just writing stuff, you know, that you can write off is always going to be a good thing. That is obviously if you're trying to lower your tax responsibility. Okay, let's get some other questions. We got Zach, we got Jay, we got Madison, Emmanuel, Amanda.
Yeah, David, I'll go.
Oh, that's what I'm talking about, Jay.
Well, I was trying to squeeze in my lunch, so that's why I was unavailable just now because I have a meeting right after this. But I think some of the questions that I already know these answers, but since this is going to be like a replay, I see a lot of these questions. One, let's just say you're, I don't know, going on a retreat to Costa Rica for like, you know, education wise, right? Can you write off those expenses? That's my first question. I'll let you answer that first.
So is it exclusively a business trip? Or is it part vacation too? You can write off a portion of it if you are attending like continuing education, that sort of thing. Like every year in Las Vegas, they have the National Association of Tax Preparers seminar. And it's like a 2-day seminar, and I can write off those 2 days for my hotel, my travel, my you know, expenses for that. But if I take my family with me, I can't write off that family. So
Just yourself.
just myself. So
Good to know. So let's just say I'm trying to set David up and this whole Costa Rica thing. So if it is like, let's just say a 2-day retreat, right? And I go by myself.
mhm.
Technically, I can write those 2 days off in the flight and everything like that, right?
Right.
But if, let's just say, I have a family, which I don't, and they decide to come along, but they're paying separately, technically, I can still write off my own stuff. They're just there.
They're just along for the ride, right?
Yes, okay.
Right.
So that will.
So what typically people do when they do take their families is they'll take the total cost of the trip and divide it by however many family members you have with you. So if you took four people and one of them is you, then you just take, you know, one person's like expenses and that.
Cool. That's good to know. I'm gonna shout out Alan because I feel as though Alan might need that information. I have a bunch of questions, but I won't take up too much time, so I'll ask another one. And this kind of gets asked a lot, I think, in a lot of communities. I think when a lot of people first start out, like you mentioned earlier, they start off as like a sole proprietor, right?
Mhm.
And then eventually they'll transition to LLC and then S Corp or whatever the domino effect of that is. Can they change at any point within the year to do that, or do they have to wait till like the next tax season? For instance, if they started off as a sole proprietor in January, but they're making enough money to be the S Corp by June, can they switch at some point in the middle of the year, or do they have to wait, or do they do that basically for tax season?
If you already had the LLC like set up and the paperwork filed with the state and everything, then you can start an S corporation mid-year. However, you would have to actually file a short year return. And so typically what we would do is say, we're going to start the S corporation the January 1st of the year following, just because it's a little bit easier and cleaner cutoff.
Good question. Real good question. Okay, I got a question from Facebook. So Whistler is asking, what do you recommend for a production company that is just starting out and not making over $100,000 to focus on to take advantage of tax credit or get ready for tax season?
So just make sure that you keep track of all of your business expenses. And I would go ahead and set up a separate business account that you are not using for personal funds. Commingling of personal funds and business funds makes it a whole lot harder at tax season time to separate out, and it's much easier if you would just use your business account for those business expenses.
Yes,
So.
and when if you don't separate and you come to a tax pro, they might be like, we're going to charge you extra to unseparate everything and figure.
They do, and they will charge you a lot extra. And so I definitely recommend that you keep it completely separate.
So,
you know, and if that's not something that's feasible for you, then just make sure that you have some sort of tax software. QuickBooks Online actually has a self-employed version that's not too bad as far as that goes, and you can take pictures of your receipts right on your phone using the apps and things. So I am a QuickBooks Pro advisor too. So if anybody needs training on QuickBooks, I can certainly help with that.
yeah, she's doing all my QuickBooks stuff. And that if you're brand new, you're not making a lot of money, that QuickBooks Self-Employed app was really kind of cool because it automatically tracks and links to your bank account. You can take pictures of receipts, and it uses your GPS to every time you get in your car and it senses that you're going faster than like 15 miles an hour, it calculates how far you drove. And then it calculates all your mileage for you so that you don't have to keep a paper manual. But Renee, let me give an example of how I have my account set up, and you can kind of let us know if that's a good way to do it or if I should completely change it.
Sure.
But so you said to keep everything separate. I've got my personal accounts at one bank, and then I have my business accounts at two completely separate banks. And in each business account, I have three accounts. I've got one account where all the income comes into, right? And then from that account, there's two other accounts. I got one account where I'll put my sales tax. So I'll separate off my sales tax and put it into that account. And then I have another account where I'm paying my federal tax, or the tax that I'm going to pay at the end of the year when you do my taxes. So I separate off those pieces, and then I have the main account where all of my business expenses come out of. Is that a good way to kind of set up to keep everything separated, or is that a little bit too complex?
You know, absolutely. I mean, it works for you because you are a very detailed person and can handle that. But a lot of times small business owners just don't know where to start. And as long as they have one business, at least one business checking account and one business savings account, then they should be okay. But what you want to do is anytime that you're collecting sales tax or things like that is move that money over to the savings account and don't touch it until you file those sales tax reports, because otherwise you're going to end up in a situation where you've spent all that money and you need to pay it to the state that you collected the sales tax from. So
don't want to do that.
Yeah. And yeah. So just make sure you're very aware of how much you're collecting in sales tax and that sort of thing. But David is a unique individual because he definitely is way more organized than most of my clients. So
do I get a discount for that? No, just
you actually do, because it doesn't cost you nearly as much. So
that's what I'm talking about.
Hey, David, do you mind if I jump in because you're on the topic of sales tax?
Sure, go ahead.
So I see this a lot because every state is different, but a lot of people always ask, and I know it's state by state, but everybody always asks, do I collect sales tax? And when should I, or if I should? For instance, I live in a state where if it is a tangible item that you're giving, such as a flash drive or a DVD on video, then I should charge sales tax on essentially the whole package. But if I'm delivering everything online and there's no physical tangible item to give, I don't have to charge sales tax. Can you kind of give some information about that? Again, I know every state is different, but just like
yes, every state is completely different. A lot of them are changing their rules because of all of the internet, like traffic and things. And so we would have to go state by state in order to be able to give you those like actual tax laws or codes. But typically, if you have a physical presence in the state that you are selling in, then your services may be taxable. Texas, on the other hand, has a list of actual taxable services. And so sometimes your service, like mine, for instance, is not a taxable service. Photography would be a taxable service. There's a whole long list of like actual taxable services for Texas. So.
Right. Yeah. And video is taxable service. So I do collect sales tax. I do pay sales tax to the comptroller when it's due every month. Yeah, sales tax is a weird thing. And I know that a lot of tax professionals, that's like a very specialty thing, the sales tax. It's not the same as doing your federal taxes and stuff. And so I don't want to confuse that too much because they're two different ball games. But the best thing to do, I think, Renee, and back me up here if I'm right, is check with your taxing authority in your state and find out whether or not your service is a taxable service or not, and the parameters around which that's taxable. And then if you are, in a taxable service that you provide, then obviously apply, get a tax permit, and
correct.
Yeah. Okay, is that right?
I will tell you that California, New York, and Louisiana are usually the most complicated because in Louisiana, I say that because every parish is actually different as far as the sales tax goes.
Oh boy.
So it's not statewide like most states.
Right. Okay. Really good question.
For those that are listening, I know since it's state by state, can you just let people know like where they can go specifically to find that information for this state?
Sure. Actually, if you're using QuickBooks or an Intuit product, they actually have a program that can help guide you through sales tax. But typically with every state, they have a Department of Revenue. You can go to the Department of Revenue's website and type in sales tax. And then once you get to the sales tax page, you can actually type in the search field taxable services, and they should pull up their rules in that regard. So
Department of Revenue, or sometimes the comptroller. I know I go through
sometimes the comptroller, like Texas is the comptroller. But if you type in sales tax for California or sales tax for New York, it should come up with the Department of Revenue or wherever they're actually taxing that.
Good stuff. Okay, let's see. Zach, Amanda, I saw that you hopped in here. Katera, I see you in here. Madison, I think you had a question. Are you available to ask, or do you want me to ask in the chat here, brother? I'll ask on here because Madison puts, he might be like in a situation where he can't get on live. So he said, I keep my W-2 wages really low so I can save on that 15.3% payroll tax. I pay my sister-in-law to edit all my videos, and even though I do all the filming, I feel that I have an argument that I could pay a shooter $500 a pop for the 30 weddings I do each year. 500 times 30 weddings is $15,000. I have a legit claim to keeping my compensation around this amount. Don't I? Does that make sense?
Yes, it does make sense. But again, this is where we would have to do some tax planning, and actually would have to take a look at your net income for the business and try to figure out if that is a reasonable salary and do that salary study.
Yeah, that's incredibly important. Okay, everybody else on the call, did anybody have questions for Renee?
I have a question.
Okay, Amanda, go ahead.
Oh, okay, thank you. Hi, Renee. Thanks for your time. I appreciate you giving us this information today. It's really helpful. So I'm coming from a place of somebody who's really just starting out. I still work a full-time job that's unrelated to video. I'm looking right now. I've set up an LLC, and I'm keeping my video stuff separate from my regular work. So I'm doing all those things. But my question is related to, I'll be putting some money into equipment and things like that towards my business, but I know I'm not going to be earning enough money to cover those expenses currently. So I'm wondering what I should be thinking about in, not just for this year, but beyond. And I'm sorry, this is old information, but I was under the impression that you can claim a loss on your business for up to a certain number of years, but you can't do that like for an extended period of time. So I'm just wondering if you can give me information about how I should be thinking about that in the future, depending, whenever I get to the point where I really start becoming profitable.
So yes, you can claim a loss. Typically, if you're a sole proprietor and you're filing on your Schedule C on your personal tax returns, typically if there's a loss for 2 years in a row, they might go to the hobby loss rules. And we would have to determine whether or not you could legitimately take that loss if it were the third year. But as far as businesses go, if you're filing a separate business tax return and that loss is year over year for 5 years, then it would depend on your basis in the company, whether or not you could actually take that loss. So, and your basis is made up of how much you've actually contributed to the business in the first place, cash wise, and equipment, those kind of things. So.
Okay. Yeah, I did set up an EIN. I just realized that I'm going to be probably for a while just spending more on equipment and things like that related to business work as opposed to the earning money part. I'm definitely working on that too, but just, trying to get my mind around that as far as what I need to be taking into account. So, yeah.
Yeah,
cool,
and if it's a startup company too, you can deduct the startup expenses, or you can amortize them. So up to $5,000, you can take in the year that you started up, or you can amortize it over the 15-year period. So.
Okay, great, awesome, thank you.
Awesome question. I have another question. I heard that President Trump had put into his tax plan something about deductions for purchasing a vehicle. Do you know anything about that, or did I hear some nonsense?
So President Trump's tax reform changed a lot actually for businesses. It was the biggest overhaul of the tax code in many, many years. And it put EAs like me who had just started their business in line with people who had already been in business for 40 years, because we all had to relearn all of that new tax code. As far as vehicles go, that comes into play for the special depreciation, depending on the type of vehicle, if it's a luxury auto, those kind of things. So I would have to, see what it was you purchased in order to be able to determine if it was 100% depreciable. And then also it depends on how much business use on the vehicle too.
Okay, the reason I ask is I'm going to buy a Ferrari and I'm going to wrap it with the real deal stuff. And then we're going to, no, I'm just kidding. I'm not doing that. Okay, cool. Let's do this. Renay, if somebody wants to reach out to you and have you handle their taxes and bookkeeping and stuff like that, how can they reach out to you? What do you prefer?
They can reach out to me, phone, internet, email, however you want to. I have a website. It's www.10pointbookkeeping.com, and it's 10pt-bookkeeping.com. Or you can call me too. I can give David my phone number. Oh, he has my phone number and information as well, so you can share that with people.
Okay, and we also have you're obviously inside the club in the private Facebook group. I don't know how much you are on Facebook and whatnot, but if people have questions there, can they ask there, or do you prefer email and stuff?
Yeah, they can absolutely ask there. I am usually on Facebook quite a bit. So in fact, my husband just bought a bar, so I'm actually promoting the bar, the bar too. So we're trying to get social media out there for that one. But yeah, so.
Good stuff. Okay, I think Katara has a question. Katara, did you have a question?
Yeah, I had a question. I had a question about QuickBooks since you guys mentioned it. I was wondering, did you have to take a picture of every receipt on QuickBooks, or like if it's a digital transaction like on Amazon, can you like take a picture of the email that they sent?
Absolutely. In fact, now there is an option to pull those receipts directly from your emails. So QuickBooks can handle that as well.
So, and I'll share with you guys my method of keeping my receipts right here. Okay, like all my receipts are in here. So this year is Special K. Next year, I think will be like Cocoa Puffs or Fruity Pebbles or something. So just in case the IRS asks, I'm gonna hit them with the cereal.
Okay, I would be cautious with that, because what happens if somebody accidentally throws that box away?
Oh no, I have it in my desk. I have it over here. Nobody comes in my office, and if they do, they know the rules.
Good deal. I would recommend like one of those accordion like file folders that has like the months and stuff for each year if you are trying to keep the receipts like that. But if you do use the QuickBooks option and take the pictures of the receipts, you don't have to keep those physical receipts. You can go back to those as long as you have as long as you actually have access to internet. You can get those receipts at any point. So
okay. Awesome. Yeah, don't be like me. Don't be old school. Be 21st century. Okay.
A lot of people like to be old school though, because they like that paper, but
I do. But see, I switch boxes. So I've got like 4 or 5 boxes, and at the end of the year, then I put that box away in storage. Anyways,
I got a quick question. Oh, before we like wrap up, if I could.
Okay, and before you, Tomas, so Renee, Jonathan Mills says he's going to be firing his accountant next week, and he'd love to chat with you soon about taking over him as a new account. So he's on the chat. You guys can link up either on the Facebook group or whatever and see what's going on there.
Absolutely. Like Jonathan, contact me anytime.
Go ahead, Tomas.
Yeah, so if I'm not quite an S Corp yet, as an LLC, how do I pay myself? How would you recommend paying myself? And
so as an LLC, are you a single member?
Yeah, and that's actually, I guess, a sub question. When we created the LLC, we put it fully under my wife's name. Mm-hmm. And so although I'm the only one that really does, work for the business, it's in her name, and our mindset behind that is, although we are both Latino, her being a woman as well, it was like that double stamped minority, if you will. So yeah, but I don't know, your thoughts on that?
Okay, so LLC is not an actual recognized entity as far as the IRS goes. So if you and your wife are both on that business, then you could file as a partnership for that LLC. But it sounds to me like she's the only one so she's a single member of it. Mm-hmm. So then she could actually set you up on, she would have to get an EIN number and set you up on wages. And then you would need to pay yourself a W-2 wage. And she could actually deduct that on the Schedule C for the business. So. Okay.
Gotcha. So in doing that, so we've got an EIN, we're straight away on that. We set up the LLC in January, and everything's gone back into, the business bank account. And like, we haven't paid ourselves whatsoever, just out of like, not wanting to do things improperly. But is that the way that we should go
now?
Then?
So the actual member, the LLC, the single member that is filing the Schedule C on their tax return would not be taking an actual salary. You wouldn't pay yourself W-2 wages. It would be a draw, basically, and you would just transfer the funds like from your business account to your personal account, and then there's no actual deduction on that. So you can't deduct that salary, basically. So you're still going to be paying the taxes on the net income, including that salary. But you just, this is where you probably want to like consider switching over to an S corporation, or even adding you to the LLC and maybe filing as a partnership. But we would have to like do a tax planning session too, to make sure that that was the best option.
Yeah. Cool. Okay. Sounds good. Thank you.
Mhm.
One last question, and then we'll go ahead, and I'm sure Renee's super busy with all her clients. So this one's actually coming from Facebook. Thomas is asking about section 179. So Renee, can you explain what section 179 is, the deduction, and does it apply to filmmakers who use their vehicle primarily for work?
So, so section 179 doesn't normally like apply to cars unless it, you know, it is 100% like a business vehicle, and you would have to take that in the first year of in service. So if you put it into service in 2021, then we would take that deduction in 2021, and we would need to determine if we could take special depreciation first, and then we would consider section 179. So it's just another tax code and another loophole for taking the full depreciation on the asset. So
okay, cool. Thomas, hopefully that answers your question. Okay, we'll go ahead and end it there, guys. I know we probably have a whole lot more questions, but guess what? Renee is now part of the Real Deal Video Strategist Club. She's in the Facebook group. So if we have questions, we can ask. If you want to hire somebody, which I highly recommend, whether that's Renee or somebody else, just because taxes is one of those subjects that if you mess it up, ooh, that could be trouble. So, and if you want to work with Renee, reach out to her in our Facebook group. Or I put your website here. So it was www.10ptbookkeeping.com. Is that correct?
that's correct.
Okay. So reach out to her there. Obviously I recommend her. I trust her because she's handling my stuff and making sure that I don't pay Uncle Sam more than I need to, which is always a good thing and keeping me out of trouble.
You guys can also like my Facebook page as well, 10 Point Bookkeeping, because I post weekly tax tips and things like that. So
just let me find that real quick and I'll post that in the thing. So
Hey, David or Renee, make sure you post it in the group too. I'm sure a bunch of us will forget.
right.
We'll do it. We do it if you post in the group.
yeah. Okay. Renee, if I search for it, is it just 10?
It's actually spelled out in Facebook, TENPOINT. Sorry. I know that's confusing.
That's all right. Actually, Renee, I think I'm looking at the right one. Yeah, I found it. Okay, cool.
It's the one that has like the swirls and the logo, like a blue
Gotcha.
swirl. Yeah.
Okay, so I'm going to put it here in the chat. I'm also going to post it in our Facebook group. Actually, you know what would be helpful, Renee, is if you could go into our Facebook group and create a post and then just put that in there.
Yeah, absolutely.
That would be perfect. That way everybody can reach out. But again, thank you so much. I like I said, having these resources to our club members is something that I've always wanted to do, and being able to bring that value to the club from all angles. You're helping us do that, which is awesome. And we really appreciate it.
All right, cool deal.
Okay.
I'm glad to meet everybody. And if you have any questions, feel free to reach out. So
Thanks,
Awesome.
Renee. Appreciate
Thank
it.
you.
thank you.
Thank you.
All right. We'll see you guys later. Oh, remember that we have a question and answer session later today. So if you have questions about working with DPCs, direct primary cares, home builders, home services, or tech companies, I'm going to have an open question and answer session later today, and it's all posted in the schedule. So hopefully we'll see you guys there. And otherwise, we will see you guys in our next meeting. Have a good one. Thanks, Renee.
Thank you.
All right. Bye-bye.
Bye.